Subscribe, like, and share. Remember to click the bell, please. Good evening, good Abend, bonsoir, buenas noches to investors in North and South America. Ohio Investor. 안녕하세요. 各位早晨. Good morning to investors in Asia. Buenas noches, guten Nacht, good night to investors in Europe and Africa. I'm Daniel Yu speaking from Hong Kong. It's 17th November here and 6th November in Wall Street. This time I'll talk about 4 points. Number 1 is the counting of waves backward and forward. Number 2 is interest rate outlook and its effect. Number 3, which sector of stocks are suitable to buy now. Number 4, progress of Russian-Ukraine conflict. This is the weekly chart of Dow Jones. Traditional method of wave counting is forward counting. That is, choose the lowest point of grand wave in the past as starting of wave 1 to count forward. Thus, in this chart, we can see is the circuit breaker of pandemic. The end of the drop is in March 23rd of 2020, which is the end of previous wave C, and also the starting point of wave 1 of the upward wave. And the counting is like this: 1, 2, 3, 4, 5. People may ask, there are so many tops and bottoms here. Why I fix these 5 marks? The answer is that you better fix wave 3 first. If you can fix wave 3, it is easy to find out other waves. Wave 3 is the most explosive wave. There are a lot of fixing means. Now I just pick up wave 3 and you can see after this, the trend is not so explosive. When referring to %K and %D lines of MACD, they intersected and dropped. Henceforward, forward bars also turn from green to red. The distance of candlesticks to Ichimoku red cloud is widest and henceforward become narrower. Thus, we can see wave 1 is here, for it already popped up above the Ichimoku red cloud. Forward bars of MACD already turned from negative to positive. %K and %D intersected amidst the rising. Mind that the Tenkan intersects the cloud line here to confirm it is a grand wave of uptrend and not rebound of previous falling trend. For wave 2, it's even more simple. A drop can be seen easily and Ichimoku green cloud exists for a short time only, but the green forward bars continue to extend to confirm it is still in a rising wave and not turning down. So we go to wave 4. First of all, we can see the width of wave 3 to the Ichimoku red cloud is the widest, and wave 4 already gone narrower. In the MACD, %K and %D already intersected and sloped downward. It means the end of explosive wave, but the grand wave is still rising. Mind that there's one more line which is called Chikou Span. Take care! This line must be used carefully. It is a lagging indicator, for it runs 26 bars behind the current price. All the way the candlesticks are under this line and now gets closer. It means the explosive wave 3 is going to an end soon. But please do not treat it as another kind of average line. No, absolutely not. It is not an average line because the usage in daily chart and weekly chart is completely different and just the opposite. Wave 5 is fixed when candlesticks are over the Chikou Span, but do not apply this to daily chart. It is in reverse and we'll talk about in next video. Candlesticks thus get nearer to the Ichimoku red cloud and %K and %D draws nearer to zero line of MACD. So the downward wave we will leave it for next week to come and now jump directly to the daily chart of the last wave. Now, we look back to the previous wave. Reverse counting means we negate what has happened in the past and concentrate on the unfinished current wave and the previous wave first, and then count backward. For in financial market, what happens nearer to current time is the most important, for it will affect the future market. Things happened 2 years ago is not so important as now. What it affects may be of 1 year ago, but what we mind most is today and tomorrow. The counting of the current wave is very simple. Wave 1 should start from October 18th of 30839 and wave 2 on October 21st of 30055. For it is the intersection of Tenkan and Kinjun. Wave 1 should not start on October 5th of 30448. Even there is a doji. For thus wave 2, 28630 will be too near to 28594 of wave 1. Mind that wave 3 met with the Fibonacci series of 0.50 in basic wave, but in grand wave is 0.618 and is retreating. But forward bars of MACD is still in positive, and the %K and %D lines are not yet intersected. Candlesticks are still above the Ichimoku green cloud. That means it is still in bull market. Investors better refer to the previous video of October 31st and October 24th. Please stick to my daily report, the US Stock Express, for a day-to-day understanding of the market, so that you need not to wait for 1 whole week to know the latest trend in the video. If you are willing to start with Do Re Mi, you can watch my series of 14 teaching videos, specially compliant for self-learning, for it includes certain tests to let you know the progress of yourself. Or you can leave message underneath to discuss with me. I'll try to answer as much as I can. Now, we better refer to NASDAQ. It is still in downtrend and not yet started the rebound wave. The pattern at bottom once was a double bottom and later transformed to a reverse head and shoulders, but unsuccessfully formed, and now turned to a triple top and goes down. And thus wave 5 is having an extension or truncation that we need to recount again like this, which is 1, 2, 3, 4, 5. Why? Because the component of NASDAQ and Dow Jones are not the same. Even Apple is chosen as a major component both in NASDAQ and Dow Jones, but in the NASDAQ, Apple accounts for 14% and in Dow Jones only 2.8%. That's why the Apple dropped so much and Dow Jones still goes sharply up, but NASDAQ turned down. So please study carefully the following 2 charts. The first one is Apple overlaying Dow Jones. Basically, Apple is running together in same pace with Dow Jones. But recent days, especially after the FOMC meeting of last Wednesday, Apple is much weaker than Dow Jones because of the speech of Jerome Powell. But when we refer to the next chart, which is Apple overlaying NASDAQ, the scene is completely different. Since February, Apple is running stronger than NASDAQ. What happens in February is the Russian-Ukraine conflict, and today is the 257th day. There's a daily counting in the US Stock Express. This is a fighting of new era. It depends on technology, such as Starlink is just a product of a private company, but can help a nation to turn the unfavorable situation to favorable situation. Also, the semiconductors used in weapons determine who can ultimately win the fighting. Individual weapon manufacturers is just a tool. in the backline chips and technology governs who can be the final winner. So when you refer to Dow Jones chart, Apple is weaker than the market. When you refer to the NASDAQ chart, Apple is stronger than the market. When you refer to S&P, oh my God, it's exactly the same level as the index. Lo and behold, no difference at all. This is what I want to lead investors to. It is called market sentiment. For the FOMC meeting, actually Chairman Powell is releasing dovish speech of rate increasing points are enoughly high for 4 times of 75 points, and in December will be 50 points, next year will be 25 points. Why it turns down the market? Because the market expects the ceiling of interest rate will shift from 4.6% to 5.05%. They are afraid of long-term suffering under high interest rate. What they really wish is that if interest rate has to rise, make it higher and faster and reach the top earlier, then it would decrease faster. But the Federal Reserve afraid it would hurt the economy. However, next FOMC meeting is in December 13th to 14th. We still have the CPI on November the 10th and December the 13th. GDP on November 30th, PCE on December the 1st, and employment report on December the 2nd. It's too early to talk about the conclusion now. The nearest explosive date is on the coming Thursday, that is November the 10th. CPI is expected to be lowered from 8.2% to 8.0%. The decrease is very slow, but if it can go under the level of 8.0% and turn up as 7.9%, it will be a great news of changing the heading figure. For the time being, better refer to entertainment stocks and retail stocks to cope with the Thanksgiving and Christmas parties. These stocks can use Dow Jones as guideline. The support will be a top line of the double bottom, which is 30448. For buying IT products, must refer to NASDAQ. The support is very dangerous. It is at the bottom of 10438 of October 13. But when it drops under, may develop into a trumpet shape. We still have to observe and see the strongest support is at 10,000 points. In the world observation of the Express, this week I will have a 5-day topic on social media, which is Twitter, Meta, DWAC, TikTok, and Google. But for the stocks talked about in the past videos, please mind that PG had already finished the pullback of reverse head and shoulders and is ready to shoot up now. But the pattern is not so standard, so may have variations. For MMM, again in a not so standard pattern of head and shoulders, already finished pullback and now in wave 3. Why the pattern is not standard still can buy. For MMM, the dividend is higher than average of the market. For PG, the dividend rate is increasing year by year. That means every year is better than last year. So they are nice choices to face the uncertainty now. But for BA and AIR, no need to say, another boom will occur in Christmas. For even winter is coming, there's no symptom of COVID-19 will enter into another peak, except in China. And the WHO may announce the end of pandemic soon. It surely will bring to another wave of retail sales, traveling, and entertainment. So those that have taken profit on Pepsi and McDonald's or newcomers can wait for a lower level to repurchase. For their 250 SMA are still keep rising. Every sector is rebounding, including the Golden Dragon Index, simply because of an unconfirmed news that China will cut pandemic measurements soon. The Express has explained that it will cut, but not so fast. The actual market mover is still the CPI on coming Thursday. Rather than any technical analysis or fundamental analysis or any forecast on interest rate, it is not only a 5-star indicator, but actually 6-star or even 7-star. Anyway, Treasury yields is still in an extreme inversion of 40 years, and Japan continues to sell the US bonds because of falling of the yen caused by rising of US dollar index. The turning point of the market not yet confirmed, may need to be clarified by December or early next year. Try to hold more cash until the turning point comes. So for Russian-Ukraine conflict, the situation has changed. Russia officially declared there will be no nuclear war, even when said it is no intimidation. Now focus should be on when will they start peace talk. One of the possible chances is the G20 meeting in Bali of Indonesia on November 15th to 16th. Watch carefully for it. There are still a lot of waves not yet counted. Stay alert. We'll continue to count them next week. Sayonara, auf Wiedersehen, adieu, bye bye. See you next week.